Quick ask. Subscribe now, then let's jump in with the numbers. You don't need a headline to tell you when a market's on edge. You can feel it in the way Florida's streets sound different on a Saturday. The palm trees are still there, the stucco roofs, the new-build cul-de-sacs, the waterfront condos still there. But the buzz around them? That's changed. Open houses that used to feel like airports now feel like waiting rooms. For sale signs hang just a little longer, and your feed that used to scream, "just sold in 3 days," is quietly swapping in price improvement and back on market. In 2025, nobody's arguing whether Florida is desirable. The beaches didn't move. The theme parks didn't close. Retirees and remote workers didn't suddenly fall out of love with sunshine. What changed is the monthly. Mortgage rates stayed high, insurance kept climbing, HOA dues ratcheted up, property taxes adjusted to the boom years, and the same house that once felt tight but doable turned into a payment that eats your budget alive. That's why this video isn't titled, "Is Florida Crashing?" It's Florida Housing Market on the Edge. These 10 cities are cracking first. We're going to walk through 10 Florida markets where that pressure is finally visible in the tape. Days on market stretching, price cuts stacking, inventory building instead of vanishing. Sellers offering concessions they swore they'd never consider. By the end, you'll know where the cracks are showing first, what it means if you live there, and how to act like a calm operator while everybody else debates slogans. Let's start with how Florida got here. From 2020 through 2022, Florida was the answer to about 5 different questions at once. Tired of lockdowns? Move to Florida. Tired of state income tax? Move to Florida. Remote worker with a coastal salary? Move to Florida. Investor hunting yield? Buy in Florida. Retiree chasing lifestyle? You already know. Ultra-low rates made it all feel painless. A $500,000 house at 3%? The monthly looked friendlier than rent in a lot of metros up north. Bidding wars became normal. Inspections were waived. People wrote letters about their dogs, their kids, their dreams, just to win a 1980s ranch in the right ZIP code. Builders raced to catch up. Investors piled in. Short-term rentals exploded. And for a while, it looked unstoppable. Then the calculator caught up. Rates climbed. Insurance, especially in hurricane-prone and flood-mapped areas, reset higher. HOAs started talking about reserve studies, roofs, seawalls, and concrete restoration. Property taxes adjusted to pandemic-era appreciation. Meanwhile, wage growth for teachers, nurses, hospitality workers, and even a lot of office jobs didn't keep up. Suddenly, the same home wasn't stretch, but doable. It was, "we can't breathe if we sign this." That's the backdrop for our list. When I say a city is cracking, I'm not saying it's becoming a ghost town. I'm saying the math has stopped blindly cooperating. Days on market creep up. Price cuts become normal, not rare. Sellers throw in buy-downs, closing credits, even prepaid HOA just to keep deals alive. And buyers, for the first time in years, are willing to walk. Let's get into the countdown. Number 10, Ocala, the "it'll always be affordable" mirage. Ocala built its brand on being the calm, affordable alternative. Horse country, retirees, and families who wanted space without Orlando pricing. For years, the pitch was simple. You can still get a decent house here without losing your mind. In 2025, you can feel that pitch strain. Insurance on older roofs and manufactured homes isn't a footnote anymore. It's a line item that breaks deals. Starter homes that once flew off the market now sit through multiple weekends. You start seeing second price cuts in neighborhoods that never had a problem moving before. Demand isn't dead in Ocala, but buyers are less obedient. They run the full monthly, principal, interest, taxes, insurance, utilities, and if the payment feels brittle, they wait. Number 9, Lakeland Winter Haven. The I-4 trade-off is changing. Lakeland and Winter Haven rode the between Tampa and Orlando story hard. Commute either way, get the lakes, avoid the big city price tag. It worked for a long time. The catch in 2025 is that every part of the ledger moved at once. Fuel, tolls, insurance, utilities on bigger, newer homes, HOA dues in master plan communities that now need to fund long-term reserves. The result? Houses that would have had 15 showings in a weekend now drift into week 3 or 4 before serious offers appear. Investors who bought on short-term rental hype are quietly rerunning their spreadsheets. Local workers look at the total monthly nut plus commute and say, is this really a deal anymore? Number 8, Palm Bay, Melbourne, Space Coast, tight margins. The Space Coast looked bulletproof during the boom. Rockets launching, engineering jobs, and an affordability story compared to South Florida or Orlando. Palm Bay and Melbourne soaked up that narrative. In 2025, the weakness shows up in mid-tier resales that need real work. Roofs at the end of life, older HVAC, windows that don't love summer power bills, insurance carriers who now actually care about all of that. Turnkey still moves, but anything that requires capital and carries a higher monthly sits longer than it used to. Buyers who once would have stretched for future equity now do the math and choose to wait or rent. Number 7, Port St. Lucie, from next big thing to slow your roll. Port St. Lucie spent the last few years starring in articles about fastest growing cities and hidden Florida gems. Builders leaned in, so did investors and remote workers. Now, the shine is still there, but the urgency isn't. New construction communities have more inventory at once. Higher payments thin out first-time buyers, and a lot of locals whose wages are rooted in healthcare, education, and services are looking at median prices and asking, for who? You start to see the two-tier reality. One market for people bringing in outside income or equity, another for local paychecks trying to keep up. Number 6, Kissimmee / the Orlando fringe, vacation dreams, owner pain. The outskirts of Orlando, Kissimmee in the Four Corners area, became ground zero for short-term rentals and second homes. Live near the magic. Rent it out when you're not here. The math looked great at 3%. In 2025, higher rates, stricter financing for condos and STRS, and rising HOA and resort fees are quietly breaking that story. Some townhome and condo complexes show rows of similar units sitting longer, with price cuts and seller will contribute to rate buy-down headlines. Owner-occupants feel it too. Their monthly now competes with high rents, and many are starting to choose flexibility over a payment that depends on Airbnb staying full forever. Number 5, Tampa's far exurbs, more house, more headache. Tampa itself still has heat, but far-flung exurbs built on the more house, more land, just add commute logic are starting to wobble. When you combine longer drives, higher gas and tolls, new construction HOA's insurance that prices in wind, age, and roof type, you end up with homes that look affordable on the listing, but not on the bank app. Days on market stretch in the deeper suburbs. Builders throw in incentives. Resale sellers who price as if it's still 2021 end up chasing the market down instead of leading it. Number 4, Jacksonville suburbs, space versus stability. Jacksonville's wider metro, St. Johns County, Clay County, and the newer subdivisions saw a massive pandemic-era run-up. The selling point, bigger house, new schools, lower price than South Florida. In 2025, the stress test looks like this. Wages for logistics, healthcare, and service jobs haven't kept up with new build mortgage payments, plus taxes and insurance. Some HOA communities face their first serious rounds of long-term maintenance conversations, and a chunk of buyers who stretch for forever homes now feel pinned by a payment that leaves no slack. Inventory isn't exploding, it's thickening. That's usually phase 1. Number 3, Sarasota / Bradenton, lifestyle meets leisure. Sarasota and Bradenton have an enviable lifestyle story. Beaches, restaurants, culture, retirees, remote workers, and higher-end buyers. For years, it felt like demand alone could carry any price. The crack here isn't demand, it's affordability for the middle. Insurance and HOA costs on condos and townhomes near the water have moved hard. Reserve funding and concrete restoration became new line items after big national headlines. Mid-tier units now sit longer than they used to, unless they're perfectly renovated and fairly priced. The top of the market still finds cash. It's the buyers in the middle, the ones with good but not unlimited incomes, who are starting to step back. Number 2, Cape Coral/Fort Myers. Boom, bust, and insurance shock. Cape Coral and Fort Myers have ridden multiple cycles. The latest boom brought in investors, retirees, and remote workers chasing canals, new builds in Florida without Miami prices. Then storms, insurance repricing, and higher rates showed up together. Now you can see more listings in certain flood and canal zones, longer DOM on houses with older roofs or questionable elevation buyers insisting on insurance quotes and inspection credits before they even think about close. The result is a visible repricing in specific pockets. Not a collapse across the board, but a clear break in the idea that anything with water in the backyard will sell at any number. Number 1, Miami-Fort Lauderdale. Brand versus bank account. At the top of the list is Florida's global postcard, the Gold Coast, Miami, Fort Lauderdale, and the surrounding luxury corridors. Demand here is still real. International buyers, funds, high net worth households, they haven't disappeared. But the belief that this market can never blink has quietly started to crack. You see it in high-rise condos with rising HOA fees and special assessments, insurance that keeps repricing risk, especially for older coastal buildings. Six-figure incomes that no longer feel rich when stacked against million-plus price tags and heavy carrying costs. Well-located, fairly priced homes that still move, but marginal units, older condos with big future bills, and anything priced off peak 2022 fantasies sit, cut, and test sellers' patience. The brand is still world-class. The monthly is not. That's what cracking first looks like. Not empty streets, not fire sales, just the math finally pushing back against the story. So what do you do with this if you're trying to make a real decision in Florida, not just win an argument online? If you're a buyer in 2025, your edge is not speed, it's selectivity. Build a watch list of homes sitting 21, 30, 45 days or more, especially in these 10 markets. Those are the properties where the first plan didn't work. That's where you can keep inspection in financing contingencies. Ask for a permanent rate buy-down instead of just a small price trim. Request closing credits to offset insurance, taxes, or needed repairs. Before you fall for photos, pull the full monthly. Mortgage, taxes, insurance, HOA, utilities, and likely repairs for roofs, HVS, windows, or seawalls. Compare that to renting something similar in the same area. If ownership only works after heroics, it doesn't work yet. In an on-the-edge market, the goal isn't to grab anything. It's to lock in a payment you can live with through good cycles and bad. If you're a seller in one of these cities, the market does not care what your neighbor got at the peak. Price to today's closed and pending comps, not to your favorite headline from 2022. Get a pre-inspection, fix the deal killers, and be honest about insurance, HOA, and any upcoming work. Decide what you are, turnkey at a premium or a project at a discount. Don't list a fixer at retail and hope the right buyer falls in love. Lead with a real incentive package, a permanent buy-down credit, help with closing costs, maybe an allowance for the roof or windows everyone knows are coming. What you want to avoid is the slow bleed of tiny weekly price cuts that train buyers to wait you out. Make the right move once. Defend it with condition, documentation, and pace. If you're an investor, this cycle is unforgiving if you're banking on endless appreciation and quick refinances, but it's clarifying if you think like a risk manager. In these 10 Florida markets, your key questions are, does this asset pay you to hold it, even if appreciation naps for 5 years? Can the rents realistically cover taxes, insurance, HOA, maintenance, and vacancy without fantasy growth assumptions? Is the local job base resilient or concentrated in one fragile sector? Insurance is not going back to what it was. HOA dues rarely go down. If the deal only works because you expect a refinance miracle or 15% annual appreciation, it's not a deal, it's a bet. Stepping back, here's the bigger point. Florida is not collapsing. It's being repriced. The beaches didn't move. The weather didn't reboot. The reasons people love this state are still here. What changed is that the cost of money, the cost of risk, and the cost of maintaining these assets finally forced a conversation about value. These 10 cities are just where that conversation is loudest right now. If you learn to read the signals here, days on market, price cuts, concessions, insurance, and the gap between incomes and payments, you'll be ahead of the curve in every other market too. Now, I want your ground truth. If you live in or near any of these corridors, Ocala, Lakeland, Winter Haven, Palm Bay, Melbourne, Port St. Lucie, the Orlando Fringe, Tampa's exurbs, Jacksonville suburbs, Sarasota, Bradenton, Cape Coral/Fort Myers, or the Miami-Fort Lauderdale Strip. Drop in the comments what you're actually seeing. Are open houses quieter? Are price cuts stacking? Are insurance quotes killing deals? Your on-the-street intel matters more than any chart. And if you want a place where we talk about housing like adults, no doom, no cheerleading, just honest risk and opportunity, hit like, subscribe, and turn on the bell. The Florida housing market is on the edge. The question now is whether you adjust with it or wait for the headlines to tell you what you already feel on your own street.